The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 21st, the terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now today, you and I are going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, during this next hour, I'm here to serve you. So feel free to pick up that phone. You can dial on in right now, 877-927-6648. But if you can't dial in, we've got you covered there too. You can always let those fingers do the walking. That's right. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question for, send those in early. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 162 points, 25,842 is the print. All the indices are in the green. Spot volatility index is trading now down below its 50-day exponential moving average. We're trading at 1506. The 50 days right around 1529.30, somewhere right in that vicinity. You've got gold off about $5, silver's down 8 pennies, light sweet crude down 10 cents. Lead the charge dollar-wise, the upside individual stock-wise. It's AutoZone. $39, that's a nice day, up 4%. Booking Holdings up 24. Google's up 13. To the downside, it's Beyond Meat. Yeah, it's Beyond Meat to eat Beyond Meat. But Beyond Meat down $8. That's up 10%, but it's had a nice run since its IPO. Maybe sellers are the ones that are now in control. Kohl's, KSS is a ticker symbol, down 9% or $5. That, I believe, is off of the lows earlier. Amazon is down 5. So there's things to look at, but we're going to look at a couple requests that have come in. The first was my apology for yesterday's system malfunctions. Hopefully we don't have those issues today. I think I know the culprit, but kind of testing it out here right now. In any event, one of the things we were trying to take a look at yesterday was silver, and that was a request from earlier today from one of our denners out here, just to take a look at it, try to identify or spot a bottom out here. We take a look at the daily contract here. If we put this up on our screen, you know, you can see several A to B equals CD patterns. The one that really sticks out to us is the following, where the high out here from February 20th down to a B point or low on March 7th, up to a retracement on March 21st. The 1-to-1 A to B equals CD of that price projection is 1442. We're trading at 1440 right now. And so the question is there any kind of buy the D point pattern here? Well, the only way that Steve-O can get a buy the D point pattern is to see some type of bullish reversal candle. Yesterday's candle was not it. It might look like a hammer. It might smell like a hammer. It ain't a hammer. So there's no bullish reversal pattern. What that says to Stevie is, okay, we've made the 1-to-1. Ideally, traders of silver would be looking for just a small little bodied candle today to the downside, one tick below the open. By the way, the open today was 1442. Even a doji would work. So as long as you close at 1442, 14.425 to be exact, out here, then you could easily get a bullish reversal signal tomorrow. What happens if you don't? Then anticipate that in the A to B equals CD world, that price would be targeting the 1 to 1.272 area. That's at 1407. That's what I see when I take a look at the daily time frame chart for silver. Now I'm going to switch over and but let's say that I'm wrong on that call. Let's say you don't need a bullish reversal candle out here. I'm going to go to that chart. I just wanted to, but while I'm doing this, I'm thinking out loud. And so since I was thinking out loud, I wanted to try to pull up a chart if I had it, just to go back and take a look at it. I do. But here's what I wanted to take a look at next. Let's just say I'm just simply dead wrong with regard to needing to get some type of bullish reversal candle. How else might you know that silver has bottomed out here? Well, the only thing that I can find, I always like to understand where is support and resistance? What tools are in our bags, yours and mine, that we can use that just clearly articulate that, identify that? And so when I pull over this 30-minute time frame chart, you'll see what I see. And what I see out here, here's one of the things that we know about this setup 9 pattern out here. One, it provides you and I with these great tools of breakout, support, and resistance. So breakout and breakdown, which is way different than trying to take a look at the exact swing point, or you can see a higher low out here. When prices break out, and let's just say silver on a 30-minute basis was trying to break out, what you do like to see is price pull back to the breakout area and hold. Well, in a 30-minute time frame chart for silver, we can see the breakout pattern 1, 2, 3, 4, 5, 6, 7, 8, 9 out here. That set up that red line. By the way, that was at 7 in the morning. That was yesterday, I believe, on May the 20th, and that price was 1436. Well, as price pulled back here at 7:30 this morning, again tested at 8:30, another test at 10 o'clock this morning, that level is held as support. Likewise, there's a breakdown area. You can see the red number counts to 9. That says that the breakdown inside of silver on a 30-minute basis began at 100 hours last night. That high is 1445. Here is the range that we are trading within. John, if you are correct that the silver has bottomed, and at this stage here, we'd use the 10 o'clock price because price came back to a level of where price had broken out. So price came back to the breakout area. What you need to see is you need to see the green horizontal line fail. Now, since we have another TDST line, this one here is at 1445, but not that much higher above, I would want that secondary one. I'd want to see closing above that. That was 8:30 in the morning. That was on May 17th, and that price point is 14.49. Other than that, now I get why price is trading in the range that it is, but I don't see the breakout or continue breakdown at this stage here either, just a sideways consolidation move. The other chart that I wanted to pull up on my screen for everyone was the horizontal trading range boundary lines out here. Now, closing below, this is 2 weeks ago, it's a weekly chart. Closing below 1477 was not a good scene for silver. That was the second on a weekly basis, and we are looking at a weekly chart out here. That was the second largest set of co-located opens and closes out there, and that should have held the support. It did not hold the support. If price is going to continue lower, look for 13.94 to be the target area. That's the intermediate term horizontal trading range, a boundary line. This is Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go out to Sarasota. Mike M. writes in and says, we'd like to take a look at a couple different symbols. He's got the gold contract, Royal Gold, and XOP. That would be 3 out here. No problem. So let's do this for Mike. Gold contract has been a disappointment, yet Royal Gold is holding price at the moment. I've got the June 21st calls at 87.50 strike. Gold contract. Well, the gold contract could cover 1289, 1304, and carry Royal Gold to 88 by the end of May. Let's just take a look at Royal Gold itself out here. And first thing, Mike, let's pop this up on our screen. We take a look at Royal Gold and take a look at its daily, weekly, monthly, and quarterly time frame profiles. Price trading right above 84.14. That's the top of its daily box out there. You don't see a center line because the center line is hidden right below the bottom, which is 81.52. I know you say you're targeting the 80. Where was it? 88. So in order for gold to do that, you need to, or Royal Gold, I should say, you need to see Royal Gold, stay above 84.14. Price is trading below the weekly profile. That's 87.83. So that would be your next resistance area. That could get you up to that 88. Is this going to happen out here? Here's the thing I would be watching. And then we'll go take a look at gold too. But here's the thing that I would be watching, Mike, because even though it's been holding up pretty well, and you're right about that, the interesting thing is yesterday formed that TD setup 9 count out there. Now, what that did was that set up the breakout area, and so price could pull back to that level. I'm not saying that it is, but just like we looked at on a 30-minute time frame chart for silver, works the same way on the daily. You get a 9 count that says, okay, price could pull back. We can see Stevie's red line is held as support. That was tested the last 4 days. Right now it's priced at 83.28. If price got below 83.28, price is going to pull back to that breakout level. That's going to be 81.86 out here. So you've got a 9 count topping pattern, even though it's gone sideways. Now, this doesn't have to call the top. It's something we pay attention to. And typically when something forms a top, price trades back to support. Well, the levels of support we've identified. You've got first in order Stevie's red line, then the breakout area of that TDST, and then you've got the bottom of the box 81.52. So you know where your areas of support are inside of Royal Gold. Ideally, you would see this thing make a higher high tomorrow. And then that would say, okay, that negates, or for the most part, negates that TD setup 9 count pattern. On a daily time frame, or sorry, that was the daily. On the weekly time frame chart out here, Mike, I don't have any good news for you other than, okay, I don't make this stuff up. When price pulled back 2 weeks ago, 3 weeks ago, 2 weeks ago, is it surprising to you that where price found support on a weekly time frame was that breakout level? Was that TD setup 9 count, that red horizontal line on my screen? I mean, truly to the T. So on an intermediate term time frame, you're asking the end of May. That's not exactly intermediate term time frame, but price at least did pull back to support out here. It made that 9 count top, by the way, which was running right into resistance at that green horizontal. That was the breakdown. The counter trend rally made its way back to the breakdown level out here. So at this stage of the game, I don't have anything really strong for you on a monthly basis. Otherwise, I'd put it up on the screen for you. I don't have it, so I can't. So that takes care of Royal Gold, or I hope that it takes care of for you, Royal Gold out there. With regard to gold itself, Gold itself is still got that same pattern or set of patterns out here that say it's still a bottom candidate. Wave number 7, that's letter G, that has not been taken out yet, so that's still active, although, you know, price is trading below a bullish structure, daily profile, below Stevie's red line. There's nothing that looks good here other than that bottom and the weekly bottom, but we've shown that enough. I don't want to show that. So what is it that we need to take a look at for gold if it's going to get its mojo back out here? At a minimum, if we just look at the 30-minute time frame, the 30-minute hurdles out here, Mike, yeah, a price broke through support. That was that red line. It was holding a support. It broke through it. Now old support has become resistance. So that's not really a wonderful thing to see at 1:23 in the afternoon. At a minimum, price would need to close above that green horizontal line at 1277.70 out here. You're 1272.60. So I don't see the turn on a 30-minute basis. I just don't see the turn yet inside of gold. So stay tuned. Stay tuned out here. Sellers really should have the upper hand out here. They have been able to breach those prior lows that have given us bottom signals out here. But otherwise, support levels have failed miserably. You don't like to see a bullish structure daily profile, even though I don't have that up on the screen here, fail. Now let's go to the third request out here from Mike in Sarasota. That was XOP. That is a S&P oil and gas exploration ETF out here, ETF. This is trading in a range between its daily profile, bottom of the box, 29.20, and the top of the box, 30.26. I don't know what you were doing there. It's gone off my screen. I apologize. I think you just wanted me to kind of review it. But here's the review. Consolidation on the daily. You've got those levels. Below the bottom of the weekly, that's at 30.43. That's still above the top of the daily. Below the bottom of the monthly, 32.43. So now the question is, did XOP form any kind of bottom on its daily time frame chart? As we go take a look at it, I don't have anything. I don't have anything out here other than this sideways move. Stevie's red line right at about 29.66 is the number. We're trading just slightly above that. Nothing to get your skirt in a tizzy on up here. XOP, sideways consolidation, Mike. That's the way that I see it right now. Short term, bullish. If you can clear really 30.26. We got to call it 30.43 though. Now that daily box, that is a bearish structured profile, and that the center line is closer to the top than the bottom. So it would be very positive to close above that. So I hope that helps you out with regard to those three areas, the royal gold itself, as well as the XOP. Let's go to our next question. This coming in from Hector. Hector from Murrieta. Murrieta, California. I was thinking Marietta, Georgia. Murrieta, California. She says, I think SM, let me make sure I write this, SMRT. So what Hector's looking for is a bottom inside of Steinmart. Whoa. Jeez, that's a candle formation out here. That's a wide-ranging bar, no doubt. Take a look at Walmart going from 96 to $1.44 today, currently traded at $1.30. What did Steinmart do? Holy shnikes out here. Well, let's look at the monthly time frame chart. What's the monthly time frame chart tell us out here? Tells us it could be forming a TD setup 9 count, but this month looks like it might close over bar number 5 right now, so that pattern's not going to be there. Hector, we come back for this break. I'll give you my 2 sets of eyeballs, the ones in the front of my head and the back of the head. See if we can try to figure out what Steinmart is doing. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. The Art of Timing the Trade charts has a special running for 1 week only. From now through Memorial Day, you can save 25% off your first month, and we'll ship you a hardcover copy of Tom O'Brien's best-selling book, The Art of Timing the Trade. The Art of Timing the Trade, your ultimate trading mastery system. This software package is the fastest, easiest, and most accurate way to analyze stocks using Tom O'Brien's trading philosophy. It automatically provides you with Gartley and butterfly patterns, swing points, retracement levels, confluence areas, expansion targets, and the power law vector indicator with just the click of a mouse. The scanner searches thousands of stocks each day and delivers a list of every Gartley and butterfly pattern it finds automatically. Just enter the promo code BOOK at checkout. This sale ends Memorial Day, May 27th, so don't let it pass you by. For all the details and to save 25% and get your free book shipped today, check out The Art of Timing the Trade charts on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at Steinmart, and the question was, how high do we anticipate that Steinmart will travel to? And you can see the breakout here. I wouldn't recommend playing it necessarily. So this is based on the news that it's opening up lockers on behalf of Amazon. I guess pickup lockers in just a couple hundred of their stores out here. If this is broken out, well, it has clearly broken out. It's got some nice volume. Let this thing pull back. Really, if you're looking at interested in buying into it. I don't know that Amazon lockers are going to sustain any kind of growth at Steinmart necessarily, but who am I to say? To answer your question, though, how high can it head to? The best data that you which is $1.48. The high so far today is $1.44. I'd watch $1.48. If prices close above that, then it can head higher. How much higher? You know, I don't know, but $3.98 would be longer term. I'm not saying it's going to $3.98. I'm just going to answer your question. $1.48 is the number I'd be looking for where the price advance might stop out there, and that is for Steinmart, ticker symbol SMRT. The next question that comes in is from the Tiger's Den. This is from Ruby. Ruby wants to take a look at platinum. So, and Ruby is long. We're looking for a bottom out here. So if we take a look at platinum, and we're looking at the July contract here for platinum, doesn't look good. And when I say it doesn't look good, this is what I mean. Just really with regard to the profiles, right? You've got price below the daily and weekly profile at 835.90. So that means what Ruby and I need to do is go find some type of bottoming pattern. That's going to be a leading indicator versus the profiles. The profile simply tells where support and resistance is. When you break through those levels, it says, boy, you better look for the next support area or some type of bottom when prices move into the downside. You're below the 240-minute. You're in between the 120-minute profiles out there. You're below the 60-minute. So there's not a lot of good news out here. Let's go searching, though, Ruby, and see if we can find some good news. We'll do that by beginning with the daily time frame. The daily time frame, look for Stevie's other charts here. Now, here's the good news. Here's the bad news. I was telling somebody the other day, one of my favorite good news and bad news. Now, it's just because I like the movie. I don't know if any of you have seen the movie Pirate Radio. I think it's one of the best music movies out there. I mean, there's plenty, but it's my era of music, all those albums but in any event, those of you familiar with that movie, you know there's a scene, and I forget the actor's name. Great actor, love this guy. But I think he passed away this past year. But he says to the gang out there, I've got good news and bad news. Which is it? You know, which do you want first? And of course they say, well, not of course, but they say we want the good news. Well, the good news is you're going to die. Really? That's what. If that's the good news, what's the bad news? The bad news is, hey, I didn't tell you how you're going to die, which was basically freeze in the North Atlantic Ocean out there. Yeah. Okay. So I don't even know how I got there. Oh, the good news and the bad news. That's how I got there. So, Ruby, in looking at the good news and the bad news, which do you want first, the good news or the bad news? Well, let's go with the good news. The good news is today could be a bottoming signal. It looks like today is going to be day number 9 of that TD setup 9 count. Now, that alone, remember, a bottom could occur on days bars 8, 9, or the bar following 9. So it doesn't have to be today on Tuesday. It could be tomorrow. It doesn't have to be whatsoever. Well, what's the bad news if this may have found a bottom? Well, the bad news is that your preference is for that 9 count to occur before price gets to the breakout support level. And that's what broke through. That's what it's broken through 2 days ago. That price point, by the way, was from the trading session on a daily basis of March 12th. Oh, man. And the price point out there was 822.20. You didn't like to see that. So what's in play out here, Ruby, is the next support level. The next breakout level takes you back to February 15th, and the low there is 785.10. So, look, I see a potential pattern out here for a bottom. My preference for you in this matter would be that we actually see a bullish reversal candle confirming this A to B equals CD pattern that we'll go ahead and put in here. What we can see is that price is trading right now at the 1-to-1 level, which is 813.80. We're at 815.80 out there. But in order for Ruby, for this to generate a buy signal, for me, you need to see a bullish reversal candle. That's not what we have today out there. So you have some potential bottoming patterns in play. Maybe you're just a tad early. You'll probably know by Thursday, right? Because either today or tomorrow, Wednesday, would be it. If you see a lower low on Thursday, you didn't get it. And that price is targeting that 793 level or the low from February 15th. So that's what I see when it comes to good news, bad news. I'm in your corner, though. I'm pulling for you. I want today to be that TD9 count setup bottom that you have. Unfortunately, the shorter term time frame charts haven't really gotten that message as far as the way that we're looking at. And when I say short term, I'm just looking at the 60-minute time frame. So hope that helps you out. Now, Duffy, was that a question, or you were just throwing things out to the den? Let me know if you know. But I don't have any other requests out here, so why don't I spend some time taking a look at the markets? Let's do that. Let's do that. Let's take a look at what the general market, the signals from the general markets out here. So this is something interesting. One of our favorite traders, we haven't spoken to him in a while, is Garo. Excuse me, didn't mean to grab that ice. Is Garo in Newport Beach, California. What a beautiful place that is. And he likes to use that parabolic star system. Now, I'm not going to show his entire system here, but just for the heck of it, in an honor of Garo, I went ahead and put the parabolic star dots on my screen out here. Now, when the dots are at the bottom, it's an indication of a potential bottom. Now, of course, Garo wouldn't trade it like that. He'd be looking at short-term charts. He'd be looking for the 5 and the 21-day simple moving average crossovers and maybe a couple of other things out there. He would use a 200-period simple moving average as well. We don't have that on a daily basis, but it is worth noting that today you've got a dot, a reversal dot on the Dow. So that's kind of interesting, or interesting to me, maybe not interesting to you. If I put the S&P 500 out here, we've had that dot for the last 4 days. So I don't know about you, but for me that says, something to think about. So if it's something to think about, what are we thinking about here, Steve-O? Well, what I did here, I was doing this before the show because I'm trying to figure out, hey, like if you listen to the show, I want to give you the best possible advice that I can. So what I did here, Garo, if you're listening, everybody else, I said, you know, we haven't taken a look at the market breadth for the S&P 500 for a few days. Let's go do that. And we did see this little choppiness out here that began on May 16th. But what we have going on right now is we have a bullish crossover. What does that mean? You know how you and I, we look at these market profiles. We take a look. Is price trade above the box, below the box? And in this case here, what this tool does is this tells us how many S&P instruments are above resistance, above the top of the box. Answer, 149. How many are below? 98. Above, bullish. Below, bearish. This is positive market breadth in the S&P 500. This should make us say, something to think about. Steve Rhodes with TFNN. Great.
The TFNN Memorial Day Tiger Dollar sale is here. From now through Memorial Day, you can get up to a 40% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN good or service. Whether you're a current subscriber looking to add instant savings, or you're a new listener or viewer that is considering signing up for any product in the near future, now is a great time to get your Tiger Dollars and lock in dramatic savings on all TFNN products and services. We only have a sale like this a couple times a year, so don't let it pass you by. Tiger Dollars are available in 3 purchase options with a 20%, 30%, and even 40% bonus. Once you purchase your Tiger Dollars, you'll be able to apply them to your TFNN account, and then they are automatically used for all your recurring subscriptions going forward, making it as easy as possible. For all the details on this Tiger Dollar promotion running through Memorial Day, visit the front page of TFNN.com and get your Tiger Dollars before this sale passes you by.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So before we went to that break, we were taking a look at the S&P 500 market breadth, courtesy of our TAS market profiles. And then just as we went off the into that commercial break, I went ahead and changed the sort or the time frame that we're looking at from daily to weekly. And what we can see that we have going on right now is about as equal a distribution as you could get in the S&P 500 on a weekly time frame basis. For example, there are 50 stocks in the S&P 500 trading above the top of the weekly profile. There are 50 stocks trading below the bottom of the profile. And that's why we have the green and red lines kissing each other at this stage here. You have 193 of those issues, 193 additional issues, are trading with inside the box, so they're consolidating. Doesn't tell us whether it's leaning bullish or bearish, but we're just really equally distributed here. What this tells me, the question was, does this tell me anything? Well, it tells me that if this is just a counter trend rally, then we're basically here, right about right now is where it should stop, is how I would go ahead and interpret that. I don't know if that's a correct interpretation. That would be my interpretation out here. And if we take a look at the S&P 500 and we go ahead and just simply look at the ES Mini out here, what do we know? Well, here's what we know. Here's what I believe we know. We're looking at the daily, weekly, monthly, quarterly profile levels out here. I would say there would be more room to run to the upside. If the weekly right is just saying, hey, it's just been a counter trend rally, I recognize the daily parabolic SAR gave you a potential signal out here, but be careful of the price levels of 28.85, 28.92. Those are the top of the monthly and quarterly levels that have recently acted as resistance. The top of the daily, not that price can't get there, is 29.10. But look, I don't know what I see. I see what it is that I'm sharing with you out here. So what other information can we use to help us gauge and monitor what the markets are doing? You know what it tells me, really? What it tells me is that expect a choppy market. Right? Your equilibrium, so to speak. We're really well balanced on the weekly. So I think choppy market may be its real message out here for the next several days. If I take a look at the ES Mini daily chart with Stevie's other tools out here, this can easily justify a bounce up to 28.84. Stevie's green line out there, your 28.67. No reason that it shouldn't be able to do that. If the counter trend rally is to end, that would be about it as well. It should end at Stevie's green line. So yeah, I guess I can make the case based on the daily and the positive market breadth. We should move higher and move higher to where 28.84. Whether or not we can clear that area, we'll have to take a look at any other patterns that might be going on at that time out there. So that's what I see now. A slightly different message when we take a look at the NDX 100, for example. Or it was earlier. Let me see what it is right now. If we pull over the daily time frame here, you're going to see this too. Well, this is really a similar message. Now, when I say similar, this is daily. You have 29 issues that are trading above the top of the box, 30 below, and 39 in between. So we're pretty well balanced here. The weekly time frame, let's just see what this says. The weekly time frame is still bearish in nature, 29 above the top of weekly and 39 below the bottom of a weekly profile out there. I believe the parabolic SAR here on a daily time frame for the NDX 100 is still not turned. It's still below the dots out here. 75.48 would be a potential stop and resistance point for that parabolic SAR. If we look at Stevie's other charts out here, let me go see what the NQs in essence are signaling to us. Well, let's look at the daily profiles as well. Not necessarily a great message there. If we take a look at this daily time frame chart, you know, price should be able to make its way up to about the 75.98 level, Stevie's green line out there. So that's what I see when I take a look at the NQ. Is there any other signals? What about intraday? It's 1:47 in the afternoon. What are the signals? Intraday, this tells us that the NQ wants to move higher, the 30-minute time frame chart. Now, we say that because price is trading over resistance. That's that green horizontal line. And so price should set its sights, this is the NQ out here, to that next horizontal level of 75.38 out there, 75.33. I apologize. 75.33 is the number where it looks to me like the NQ is targeting. In the markets today, I believe it's the Russell, and it's the semis. Let's not talk about the semis just here. It's the Russell 2000 of the 4 core indices leading the way up 1.25%. So the interesting thing about the Russell 2000 really is yesterday's price action. And yesterday's price action saw price get down and test support, the bottom of that daily profile, 1527, and which held. I can see that the bar has turned orange. This suggests to you and I that we may see a brand new profile form tomorrow. We may. Doesn't have to happen. A lot of it's going to be the end of day readings and so forth, but there could be. In lieu of that, since support is held, the Russell 2000 could easily bounce to 1579 to 1600, either the center or the top of its bearish structured profile out there. And yeah, it looks like that's where it's headed to. You know, the yellow numbers 1607 and 1497, really the consolidation that the Russell's been trading within really began back in February of this year, February 7th. In essence, is the bottom of that consolidation pattern. So it looks like the Russell wants to move higher, but what is its short-term chart showing you and I? Just looking for clues here. So how about this with regard to the Russell 2000? You know, we got the schnot kicked out of it. It is now back up on its feet. It was able to take out the 5 a.m. breakdown area. That price was at 15 42.20. Price broke above it. It tested it, pulled back, and said, hey, maybe old resistance is new support. So it wants to move higher. Let me throw a third line on here. Give me a moment to do that. Let me do a third line. I only have 2 lines out here. Let's see where the third one comes into play, the third breakdown level. So that would say that where price should be targeting is going to be from 2130 hours on May 16th, 1561. 1561. That's the current message of the Russell 2000 for its shorter term time frame chart. So we'll see if any of that comes to fruition out here. But here's what we know, just to sum it up. The daily chart for the S&P 500 has positive market breadth. And that would suggest to you and I that the ES Mini should make a run for 28.92, 28.85. The Russell held support yesterday, so it could run up to the 1570 1600. That's the daily. I gave you a different number, I'm sure, on the 30-minute time frame chart, but each of those were higher, not lower. That's what the chart patterns are telling you and I at 1:50 in the afternoon. Steve Rhodes with TFNN. We'll be right back to close her out.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Interesting. I was just pulling up the HYG, and just like the S&P 500, it too got a generated a parabolic SAR dot below price, suggesting that it too wants higher price. And if that's the case, that's a positive liquidity for the market. So speaking of liquidity, and just really to narrow down what it is, so what we've done here today and take a look at the indices is just try to gauge, look at an assortment of tools to help us identify what the market is doing. Market breadth is a wonderful tool to help us understand why prices might be moving higher or lower out there. And we saw on the daily basis, you've got a bullish crossover, and on the weekly, we're right at neutral right now. So that being the case, I'd say there's just one thing to pay attention to today. That one thing is nothing more than a spot volatility index. And if the spot volatility index closes below its 50-day exponential moving average, we have been below that for quite a while. That level is 1528. When we began the show, I wasn't sure if it was 1529, 30. Well, it's 1528 right now. And the spot volatility index is at 1498. That's what I would use, folks, out there. My interpretation as to where we're at, a choppy market out here. So it's perhaps more of a intraday traders type of set of patterns that we're in on Tuesday. Maybe it makes sense, quite frankly, going into an extended holiday weekend out there. You got to figure it's summertime, and most traders, so to speak, are going to start taking off tomorrow, Wednesday, Thursday at the latest. Forget about Friday. Friday, they're gone out here. So I'd have to say that as your weatherman out here, the markets couldn't bust them down yesterday. And so it's suggesting sideways to slightly higher, probably for the next couple of days out there. Thanks for being here, folks. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you tomorrow. Have a terrific Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology.